Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Apple report for Friday, September 8th, 2023. Before I click through all the charts, just want to encourage you to please click like if you haven't already and subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the Apple report, daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500, the NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for 20% swings on those underlying stocks. Just on Thursday, we put out a stock pick on Snowflake Incorporated. Earlier in the week, IBM. Last week, Netflix, etc., two every week. You can check all that out. If you want to sign up for wickedstocks.com, we offer a 5-day free trial up front. So you can check out all the analysis that I just mentioned for 5 days, no cost to you. If on the 6th day you haven't bowed out, your credit card is charged. That's kind of the way it works. But you can bow out at any time. But I suspect you just might stick around for a while once you see everything that we offer on a daily basis. Let's jump to the charts. I'll show this long-term buy signal that is still in effect, believe it or not, above 168.33. This structure, when we settled above it in May, set off a long-term show of strength, ultimately, or at least over the next year or less, anticipating, yes, 226.21 as a longer-term objective. But we're in a very wild phase right now, I think you would agree, and I'm going to jump to the daily chart right now. We did have, and I don't even show it here, but you know that, we had, I'll jump to this chart here. We had a descending 2/3 speed line that we settled above last week and came crashing below on Wednesday. Big gap lower and continued sell-off on Thursday. And so that is, in fact, I'm probably showing the wrong chart. I will get to this chart actually in just a moment. But what I really want to show is really kind of the day setup right now. Upside, I've got 178.21, nothing more than Thursday's high. I think if we push through, especially if we open above 178.21, 181.76 in reach today. I like 181.76 because it's a 50% upside retracement. It's very similar to the high that was put out a few weeks ago that lasted for the better part of a week, and the low that was put out on Wednesday during the big sell-off. So this entire area, and these 2 points, the low here and the high here, are lower in value than 181.76. So it gives this market breathing room to push into the 181 handle. 181.76, able to contain session strength. And if we close today above 181.76, I do see that as pivoting the market aggressively upward into next week, closes the gap. With this kind of volatility, within 3 to 5 days, we could test 190.41, which is our, how should I put it? This structure can contain weekly buying pressures. Possibly into later September, we might fall off. So how do I structure this? Day traders go long above 178.21. Day traders take profits at 181.76. And 3 to 5 day swing traders just might sell 181.76. With this kind of volatility, I don't want to encourage aggressive selling at 181.76. I don't want to call it a 2 or 3 star resistance area, but just know that we could come off of 181.76 and from here fall back to a long-term support that is presently in the 168 handle. This is the same daily chart. 168.02 is a new descending channel bottom. And of course, on that weekly chart, we've got 168.33 all week long. So keep that in mind that we could come off of 181.76 and fall back to perhaps into that 168 handle by the end of next week. On the way down today, and let's cover the downside. 174 even. Now, yesterday's low, Thursday's low was 173.54. 174 even is the low settlement price following that July high. It can contain intraday weakness. If we break 174 even, 171.96 is likely intraday, and that is the actual pullback low in August. So 171.96 expected today below 174 even. 171.96 can contain session weakness, and if we close closed today below 171.96. This, yes, I'm going to say still targeted 168 handle support, 168.02 descending channel bottom, 168.33 is that weekly channel top. This zone in the 168 handle, well equipped to absorb selling not only through next week, but quite possibly through the rest of the year, because above which a long-term show of strength remains in play despite everything we've seen over the last month since the high was put out. And so, yes, if we were to close below 168.33 at the end of a week, or, really any daily settlement below 168.02, that would set up, and I don't have it shown here, and I don't even know exactly what the number is, but I do know it's in the low 150s. In the low 150s, oh, here we are, mid 150s. There it is exactly. Rising 2/3 speed line becomes a 2 to 3 week objective, possibly within 2 to 3 days with recent volatility, if we were to close below 168.02. But this area in the 168 handle, solid bottom picking territory, not only for day traders, 3 to 5 day swing traders, 2 to 3 week swing traders back to channel resistance, but even longer term investors can make use of that 168 handle, support, because once again, above which a longer term bullish continuation expected to 226.21. As far as 226.21 is concerned, I will say that closing over the next couple of weeks above 190.41 would be an indication that we still just might reach that over the following, 2 to 3 months, if we can close above 190.41. But we're a long way from that. Let me just remind you, and once again, this is the day trade setup. Selling 178.21 or not being long below 178.21. I think that's probably the better way to say it. Aggressive day traders go long above 178.21, expecting 181.76 intraday, where profits can be taken on a long position, and short entry perhaps as we move not only through the rest of the day, but into next week. This is an area, I think, that might just contain buying into later next week, and from there we could fall back to what remains long-term support in the 168 handle. And if we were once again to close above 181.76, we should by the end of next week reach 190.41, where we can top out through next week, possibly the balance of September trade. Downside, once again, 174 even, able to contain intraday weakness. And if we break 174 even, 171.96 likely, where we can bottom out for the day. We can form a double bottom here for the day, possibly into next week. But really, I think with what's happened recently, you should respect this market's ability to continue south over the coming days into the 168 handle, where a long-term buy opportunity presents itself. If you're short, based on recent sell signals, most notably Wednesday's big sell-off and settlement back below that speed line, and you're holding out for the 168 handle, this is a solid zone to take profits in and to go long as we move through next week, through the rest of September, and through the rest of the year. And that is all I've got to say for Friday's Apple Report. Please click like, share, subscribe, and check out wickedstocks.com. You have a great weekend.